Hey everyone, Joe Gill with My Phoenix Real Estate, and welcome to 2025. Happy New Year. Um, we're going to take a look at pretty much everything that happened in 2024, do a quick review, and get a better understanding of what we should expect in 2025. I think a lot of people are hopeful, but there's tons of speculation, and it can go many different ways. So let's get right into it. So this is something that we include in our class every first Tuesday, Chris and I. So I threw in, forgive yourself for not knowing what you didn't know before you learned it. Seems kind of obvious, but a lot of people kind of kick themselves for not knowing something, but that's ridiculous. You know what I'm saying? So you learned it now, so now you can use it. Feel free to follow our Facebook page. We do some updates there, just kind of some basic write-ups. Try to get it weekly, just so people can follow along and see what's happening in the real estate market. The rest of this stuff is going to come from the Cromford Report, so I'll get right to it. Cromford Daily Observations, they just give a sort of an editorial of what they're seeing. It's super helpful. So we're now at the end of the holiday period, so the favorable season pattern, which includes cancellations, that has caused supply to decline, has reached its end. So a lot of times we see those contracts end at the end of December, and then January 1st, we kind of have a clean, fresh, clean slate, starting fresh. So from now on, we would expect the supply of active listings to grow again. How long that trend lasts will reveal a lot about how 2025 will turn out. So we'll be watching the supply level very carefully. So the reason being is because we've got, 750 or so coming soon, waiting to go onto the market. Um, so if we have a bunch of folks rush because they want to be there for the spring season, then we're going to launch that inventory. And now our actives are going to grow, and it's to be determined whether we've got the demand to follow. So that's something that we'll have to just wait and see. So take a look at the purple line. That was 2024. So all that year we were pretty flat. I mean, that's the flattest it's been in a long time. And then it finally kicked up later or I guess in early summer, and then finally peaked in late summer, early fall, and then to finally start to decline. Once we got 18, about 18,500 to close out the year. Part of that was due to new listings being down, right? So that number was declining, but why? So you had your normal seasonal cancellations. People are deciding, never mind, we're gonna try again next year. You also had fewer new listings. So if you look at sort of the lighter color green at the very bottom of the screen, we've got 2024's December numbers, and that really only clocked in around 5,500. So that steadily declined from October. November and December were significantly lower than October. And that was a good thing because otherwise, had it continued at that clip, we would have been adding thousands. We would have been in the 20,000s as far as inventory goes. So good for all, really. Um, Canceled listings, it's not as extreme as I really expected. I expected to see that last bar in Q4 just spike, but it looks like it's a little bit tame. Looks like most of the cancellations happen in November. However, I'm curious to see what happens in the first quarter, in January. Actually, you can see back in 2023, we had that was the highest number of cancellations of the entire year. So that was following the correction year of 2022. So we got that Q1. This is following the normal patterns that we normally see. So let's see where that's at. It's probably going to be, I mean, I bet it's 16 or 1700. So we'll see. Next video, we'll take a look at that. Let's look at our under contract. This is the demand. It trailed, and we finally broke through and did a little bit better than last year, and that was fun. Then we even did better than 2022. That was also fun. But we're kind of just ending up where we thought we would. This is a little bit easier to see. Um, it's a difference of 16%, right? So if we have a 16% increase from 4,600, 600, that's more homes being under contract at the very end of the year. Now, something to pay attention to is if you're looking at 800,000 and up, right? So this is all homes 800K and up. The delta is 40%. So we have 40% more homes under contract at the end of the year. So a couple of things. A, you got price appreciation, which kind of just moves that needle that direction anyway, right? It reduces the number of homes that are below that line in the first place. Secondly, one of the notes that the Cromford left is it's the pricier parts of the market that are holding up best as wealthier buyers are far more active than those of more limited financial means. That means people that have a bunch of money that just made a great year in crypto and stocks are spending that money and they're paying cash. You go buy $1 million house, $3 million house, $4 million house. You're not going out and trying to get a conventional loan. You know, you're using different tools to purchase that property. So this hurts the people that are depending on a normal loan because all of a sudden you're at 7% interest rate and that hurts. So we're starting the year out right at 6.91, just below 7. And that's not awesome when you compare it to sort of the fluctuations that we saw over the past couple of years. We dipped way down. Man, that was looked like it was going to be going in the right direction, then it turned right back around. So it's anyone's guess. Everybody keeps on speculating. I'm not going to do that. I don't care. It doesn't matter. Let's take a look at the contract ratio. So because of that supply and demand um, working together, this sort of gives us um, a general market health number. So below 30, that's pretty cool. So we are not super strong, and it looks like it's declining. If you can take a look at the shape, this is what we're expecting to see anyway. So, today should be the day. We should see that thing climb really see traditionally all the way up through May, right into June. But we kind of started to decline a little bit early in 2024. So we'll see what happens with that number. Cromford Market Index is actually looking pretty good. This is our forward-looking indicator. You can see last year we were the blue line, and it just kind of got worse and worse, and it just nobody was excited. Finally turned the corner right before the end of the year, and it looks like we're right at 90.4. So if we keep between that 90 and 110 range, that's sort of the balance zone. If we break through and we go up into 115, 120, or even above that, then that means that we're going to have some pretty decent buyer demand, and sellers should enjoy um, having a little bit more activity on their listings, right? So this month and last month, on the right side, this is all the Cromford market indexes for the individual cities within the metro. And you can see that on the left side, we had quite a bit of red. So that was from the previous month. Things had sort of devolved into the numbers that you see. But then this month, starting in January 2nd, the difference in those numbers appears to be mostly positive. Sorry, Surprise and Maricopa. We know that you guys are on the outskirts, and you'll turn back around. We'll get you. But that's it in a nutshell. I mean, we see things sort of improving, getting ready for the spring. We just don't know how drastic it's going to be. So last year we were expecting it to be pretty good, and it sort of fell flat. So now I'm not getting my hopes up too much, but we should just be paying attention to that buyer demand. You're going to have to, or well, what we do is we call the listings that are around the neighborhood, find out what the activity's like. Do they have a bunch of showings or do they not? That's what kind of helps us gauge whether we should be reducing the price or doing some other things to help market the home and get it sold. So you're just going to have to do some work, make some phone calls, dig for the information, watch patterns, really understand what's going on with the market. That's actually, you don't have to do that. We do that. That's our job. And that's why we want you to hire us, because we will do that gladly for you and help figure out where you should be to get that house sold or to find your next place. So until next time, Joe Gill signing off.